So there's a pretty big difference there. I mean, if you have the reserves to do it, then you could, take that hit and go with your purchase price lower. But I usually, with my clients, will try to push for that closing cost assistance, because that's money directly out of your pocket right now versus $18 a month or $10 a month. I mean, that's a couple lattes.
Especially for a first-time home buyer. I don't know, I'm sure people in here own homes, but that is so important, especially for up-and-coming people or your first house, that you don't want to spend your savings up to this point in your life on your house. You still want to have something in case something, say the furnace blows up,
right,
or something major, you break your leg, you can't work. And these are all things lenders look at, in terms of qualification. So it's very important that you make the right decision for yourself. Of course, the lender's going to help you, to guide you and tell you if you can or if you can't in terms of their eyes. But it's a very important decision in that respect.
For loan selling, do all banks now have to disclose if they're selling your loan to another party?
Yes, they've always had to disclose it. But it seems as though they always haven't had to explain it, okay? Because still to this day, I get people coming in that was originated at Alaska USA, but now they're sold off to some unknown financial corporation. They want to know how that happened. Well, I asked them to bring in their closing packets, and sure enough, it says right there, we're going to sell your loan to this particular bank. And then once that happens, it's out of Alaska USA's hands. But it's up to the originator, the person that you're talking to, your trusted financial advisor in this matter, to explain those things to you. And that should be done right up front, because there's a huge rate discrepancy. I would say huge, but a quarter point most of the time, if we keep it here or we sell it off to you. And once, say US Bank gets it, they can sell it to whoever they want at any time. And then that lender can sell it to whoever they want. And then you lose track a lot of the time of who owns your loan, and that happens. You don't know who owns your loan. You don't know who you gave your payment to. Hence, they report you late. If you're late on a mortgage, that is not good on your credit report. One of the worst things that can happen. So they do have to tell you. They always had to tell you. But now I think it's a little more of a stress on guiding your member correctly, Yeah.
And are you notified every time that loan is resold?
You're supposed to be, but
by mail, typically by mail, but for example, if it's sold to Wells Fargo and Wells Fargo sells it to America's Servicing Company, they hold a lot of Wells Fargo's loans. They may send you something in the mail saying, okay, now Wells Fargo or America's Servicing Company has your loan, and please send your payments here. And you just have to make sure that one, you open the mail.
Don't miss that flyer.
Because that's kind of important. And two, just make sure that your payments are the same. But it happens over and over, and that's how banks make money. Is they sell them in the secondary market, and third market. So.
Because they're banking on the fact that you're going to keep that loan for a significant amount of time. Even though the average homeowner is probably between 5 and 7 years, they're going to keep either that loan or that house.
Right.
And that's where you start talking about points, interest points. A point is 1% of your loan amount. 1 point is 1% of your loan amount. And interest points are basically prepaid interest to buy down your rate. When you buy down your rate, it makes sense. Everybody wants a lower rate, you get a lower payment. But if you're going to throw all this money at it in the beginning and you don't do the math correctly and you move out, say you don't see a benefit for 5 years and you move out in 4 years, you just wasted money for absolutely no reason. Granted, you made your everyday living expenses a little bit, probably just a little bit less. But in the long run, you might have thrown away $1,200 that nobody's ever going to use. So when you're using points, my rule of thumb is if you can't recoup the cost of the points in 3 years, or you're not going to be in the house for more than 3 years, don't even think about points. And I'm talking into points, don't even talk about points. Especially in this market. The rates are so low, maybe, you might want to buy down 1/8 of a point at the most, but right now the rates like Alaska Housing for first-time homebuyers 4.75, and that's tax exempt.